You know, Canada is standing at a really critical economic crossroads. We're talking about one of the most important decades in the country's history. There are these huge global trends happening in trade, in technology, and in alliances that are completely redrawing the map. And for anyone trying to figure out where Canada is headed, well, these shifts are everything.
So that brings up a really serious question. For decades, the Canadian economy has pretty much stood on two main pillars, right? Our incredibly tight relationship with the United States and the manufacturing power of China. But that world is changing, and it's changing fast. So are those old foundations actually strong enough for what's coming next?
Okay, so here's how we're going to break this all down. We're going to look at four key areas. First, this massive global realignment in trade. Second, what some people are calling a resource renaissance for Canada. Third, we'll dive into the pretty complex puzzle of our population versus our productivity. And then at the end, we'll pull it all together into a clear framework you can use for investing.
All right, first up, this great global realignment. And I want to be clear, this isn't just some minor tweak in trade policy. We are talking about a fundamental restructuring, a complete redrawing of the economic map.
This slide really shows you the shift in a nutshell. We are moving away from that simple two-country world to a much, much more complex web of relationships. The big buzzword you're hearing everywhere is friendshoring. That's basically where countries are deliberately moving their supply chains away from geopolitical rivals and putting them in countries they trust.
So what's actually driving all this change? Well, it's a few big things. You've got the rise of new Pacific trade deals that give Canada a leg up in some really fast-growing markets. But at the same time, there's a real risk that our main deal with the US and Mexico could get a lot more protectionist. Then you add in China's slowing economy, and you can see why everybody is scrambling to find reliable, stable partners.
And this, right here, this gets to Canada's really unique position in all of this. In a world that's been totally spooked by supply chain chaos, being seen as politically stable, rich in resources, and just plain reliable, that's a massive advantage. The game is shifting from who can make it the absolute cheapest to who can I actually count on to deliver.
Okay, so here's the bottom line. Who wins and who loses in this new world? Well, on the winning side, you've got sectors like critical minerals, energy, and agriculture. Things the world absolutely needs from a source it can trust. Transportation and logistics also get a boost, as trade routes literally get redrawn. On the flip side, though, manufacturers who are super tied to China or who rely on those old, low-cost supply chains from Asia, they are facing some serious headwinds.
Now, this brings us right to our second major trend, and you'll see how it builds on the first one, this surging demand for Canada's natural resources. This is all about the world needing exactly what Canada happens to have right under its feet.
The big idea here is that we might be walking into a brand new commodity supercycle. And what that means is a long-term period where the prices for raw materials are just structurally higher because global demand is absolutely massive.
Copper is the perfect way to see this in action. I mean, just look at this chart. Demand is projected to explode, and it's all being driven by electric vehicles, by renewable energy projects, by expanding power grids. Seriously, every single part of the green energy transition needs a ridiculous amount of copper.
And it's not just copper. Demand for oil and gas is staying strong while the global supply is really tight. Agriculture and things like potash, well, they've become critical for food security, which is now a huge geopolitical chess piece. And of course, you've got the critical minerals, which are literally the building blocks of this new green and digital economy.
This is probably one of the most powerful takeaways for any investor. This trend is what we call an external tailwind. It means that even if Canada's own domestic economy is growing kind of slowly, the global demand for our resources can still power huge returns for the companies in those sectors.
Okay, so let's pivot. We've talked about the big global picture, but now let's look inside Canada's own economy. This brings us to our third major theme, which is this really complex puzzle of people and productivity.
First, let's just start with a simple fact. Canada is growing, and it's growing fast. Mostly thanks to immigration, our population growth is one of the highest in the entire developed world.
But here's the puzzle. While our population is booming, we rank near the very bottom of the G7 countries when it comes to productivity. That's basically the economic output we get for every hour we work. So we have more people, but we're not actually getting proportionally more output, and that creates a real economic tension.
Now, this tension creates two very different sides of the exact same coin. On the one hand, you have immense pressure on things we all feel, like housing affordability.
strain on the healthcare system and the demand for infrastructure. But on the other hand, a growing population creates some really clear opportunities for businesses that serve those needs. Think banks, healthcare companies, and the folks who sell consumer staples.
So how in the world do you solve that productivity problem? Well, the most promising answer is probably artificial intelligence and automation. Canada actually has world-class talent in AI. The massive opportunity here is to apply that talent to our core industries, to make mining and energy and logistics way more efficient. This is the key to bridging that gap between people and output.
So, we've covered these massive shifts happening around the world and right here at home. Now for what might be the most important part. How do you take all this analysis and turn it into a clear, actionable investment strategy? So here's a framework that kind of divides the economy into two big camps. On one side, you've got these powerful tailwinds just pushing sectors like energy, mining, agriculture, and infrastructure forward. They directly benefit from that global demand and realignment we talked about. But on the other side, you've got headwinds hitting businesses that are uncompetitive, maybe too tied to China, or dependent on cheap labor models that are just getting outdated. And you can use a pretty simple process here. First, start with a big macro trend, like friendshoring or the commodity supercycle. Second, figure out which Canadian sector is most impacted by that trend. And third, that's when you do your homework to find the strongest, best-run companies within that specific sector. At the end of the day, this whole thing is about filtering out the short-term market noise, all the daily headlines, and focusing on the deep, structural currents that are going to shape returns for the next decade. If you follow the trends, not the noise, that's how you invest with clarity.
So as we wrap this up, I'll leave you with a question to think about. As Canada's economy is being totally reshaped, where do you see the biggest opportunity? Is it in our natural resources, our new global relationships, or is it in the robotics and AI that could finally solve our productivity puzzle? The answer to that is probably going to define the next generation of Canadian investing.